Hi ladies and gentlemen, this is Susan with Advantage Realty and the March 2020 monthly market report for Keeping Current Matters. Let's start with the news. And we all know that the news has been about coronavirus and how it's impacting everything around us. But I'm going to leave that out. I want to stay focused on the business itself and what's taking place. So let's get started with the news because there is a lot of good news. The year is starting off, and most people projected the year was going to be a pretty good year to begin with. It's starting off even better than people anticipated. As a matter of fact, in the latest Black Knight report, they said the housing market is heating entering 2020, and the recent rate declines could continue that trend, a sharp contrast to the strong cooling that was seen at this time last year. So we're starting 2020 off very strongly, and part of the reason, as we're recording this, is interest rates are at 3.45%, which is more than a percentage point less than where they were at the same time last year. So we're in really good shape, and demand is extremely strong. But we still have challenges with supply, and supply and demand determine everything. Here's ShowingTime's latest monthly report that shows overall people out looking at houses right now is up over 20% since this time last year. As a matter of fact, the reported increase in buyer foot traffic is the largest in the history of the ShowingTime Index, and it's increased dramatically in double digits all across the board in every single region. And they're not just looking at houses, ladies and gentlemen, they're actually purchasing them. The existing home sales report from the National Association of Realtors shows that overall the number of sales is up almost 10% since this time last year, with the South and Northeast leading the way with double-digit increases. But every single region did well. And that's the demand side. On the flip side, the supply side, we are not doing as well. As a matter of fact, year over year, inventory declines are beginning to increase. This past month is 13.6% for all price ranges. Houses under 200,000 are down 19%. The inventory available between 200,000 and 750,000 is down 12%, and even houses over 750,000 are down 5.9%. Now, the good news is, according to the United States Census Bureau, privately owned housing stocks authorized by building permits in December, last month that they give us, is usually adjusted annual rate of 1,416,000. That's a 5.8% above December of the previous year. So what we're looking at is more and more new construction is being built, and that's going to help us alleviate some of the inventory challenge. But my goal is to make sure that homeowners are truly thinking about selling. Because as Zelman and Associates explained, with better than seasonal demand trends, tightening supply, and interest rates near record lows, the pieces are in place for the recent lift in home price appreciation to increase further in 2020, in our view. So what we're seeing now, the people that are projecting home prices are upticking those projections for this year. And if we go through the 6 we normally give you, we can remember that 2020 numbers were all in 2s and low 3s the last time we gave you this report. And right now, we see that the Mortgage Bank Association, Zelman and Associates, Fannie Mae, and the National Association of Realtors are all projecting over a 3.5% increase this year. And 3 of the 4 are projecting over a 4% increase in home appreciation. The 2 that are still under 3, Freddie Mac and Home Price Expectation Survey, are quarterly reports, not monthly reports. And I believe that their next quarterly report, when it comes out, you'll see that they too will uptick their expectations. Now, whenever we're talking about increasing prices, the one thing I'm concerned about is people starting to say, well, houses aren't affordable. And we do know that from a recent survey from CoreLogic that the leading obstacle to homeownership is people's perception of affordability. Back in 2018, 30.1% of all people surveyed said that that was the leading obstacle to them obtaining home ownership. In 2019, that number jumped to 40%. 4 out of 10 people say they want to buy a house, but affordability is an issue. What we have to understand, ladies and gentlemen, is that even when prices are going up, that doesn't necessarily translate to making houses less affordable. As Mark Fleming, the first American chief economist, explained, when demand increases for a scarce good, prices will rise faster. The difference between houses and other goods is that we buy them with a mortgage. So it's not the actual price that matters, but the price relative to purchasing power. What does that mean? It means how much of our annual income do we put towards mortgage payment? That's the part that really matters. What is the monthly payment? Historically, that number, if we go back decades in time, comes to 21.2%. About 21% of our overall income was put towards the mortgage payment. As we can see, because interest rates have been so low, that number has dropped dramatically over the last 18 months, and today stands at 15.5%, well below the historic norms. Now, that same Black Knight report I referred to before explained, still, even with home price growth accelerating, as we said, prices going up, today's low interest rate environment has made affordability the best it's been since early 2018, the last 2 years. Despite the average home price increasing by nearly $13,000, the monthly mortgage payment required to buy that same home has actually dropped by 10% over the same span due to falling interest rates. And ladies and gentlemen, rates are continuing to fall. Black Knight went on to say that, put another way, prospective homebuyers can now purchase a $48,000 more expensive home than a year ago while still paying the same in principal and interest, a 16% increase in buying power. So houses aren't less affordable this year, they're more affordable, and more affordable than they've been in the last 2 years. Now, we keep on hearing about this affordability crisis. Understand the vast majority of those headlines are created in the rental market. So what we can see here is that historically the cost of renting, the percentage of income needed to afford the median rent, was at 25.8%. That number is up to 27.8%. So the amount of income you would have to take is much higher than you would to take if you were buying a house. Plus, it's increasing over historic norms. Again, that number's on the purchase side of 21.2% historically, and now that is down to 15.5%. That's important because with interest rates low, the percentage of home your total income that's needed is low. People have decided now might actually be the best time to purchase. In a recent survey done by Freddie Mac, how likely are you to take advantage of low rates to purchase a new or additional investment property in the next 12 months? 54% of younger millennials, 40% of older millennials, 27% of Gen X's, and 11% of baby boomers say yes, they are likely to take advantage of the low rates to purchase a new or investment home over the next 12 months. When asked the question, how likely are you to take advantage of low rates to sell or purchase a larger home? So now they're talking to sellers that are thinking about moving up into larger homes. Younger millennials, again, 54%, older millennials, 40%, Gen X's, 21%, and baby boomers, 9%. So when interest rates are down, the consumer is understanding, I can buy more house. Make sure you understand that. Now, going into an election year, you're starting to hear debates. So I wanted to cover this. There's more and more talk about opportunity zones. So let's talk about what an opportunity zone is, because I think as we get closer to the election, there's going to be a lot of conversation about it. According to the IRS, an opportunity zone is an economically distressed community where new investments under certain conditions may be eligible for preferential tax treatment. Localities qualify as opportunity zones if they have been nominated for that designation by the state, and that nomination has been certified by the Secretary of the United States Treasury via his delegation of authority to the IRS. Basically what they're saying is neighborhoods that have been blighted, they want to put money into those neighborhoods in order to bring those neighborhoods back. And again, there's a lot of money being used to do just that. Jonathan Squires, director of Cushman & Wakefield, which is a commercial real estate broker, says, we saw a push toward the end of last year. Opportunity funds are becoming more popular due to the fact that there is clarity in the guidance. Of the properties that we are marketing in the opportunity zones, 10 to 20% of those deals are now bought by opportunity funds. So what's winding up taking place, ladies and gentlemen, is that there's money being put into certain neighborhoods in order to bring that neighborhood back. Now here's what that means to housing, the real estate market. 78% of zones had median home prices in the fourth quarter of 2019 that were less than the national median of 257,000. Some 48% of the zones had median prices of less than 150,000. Because those neighborhoods had been blighted, the residential real estate that's in those neighborhoods and that's around those neighborhoods, the value has been kept down. They haven't appreciated like they normally should. For example, the median price in opportunity zones, 48% of all houses are less than 150,000. 16 are between 150 and 200,000. 14% are between 200 and 257,000, and 22% are 257,000 or more. So it's lower end homes compared to the national average sales price. But what's going to happen in those opportunity zones as that money's put in there and as they bring those neighborhoods back? The residential property of those neighborhoods will also increase. So we're looking at a windfall here right now. If you're working in any community that does get opportunity funds, that is labeled an opportunity zone. In order to find out whether your neighborhood actually qualifies, here are two websites you can go to, one from Economic Innovation Group and the other from the United States Treasury Department, to find out exactly whether your area applies. Well, I've covered a lot of information right now, and as always, I give you the resource centers. So if you want to check out those opportunity zones, if you want to check on any information given in this monthly market report, you can go directly to the source, whether it's an article, a white paper, a study, or a survey. Just pause the video to see all the links. And remember, both the spring buyer and seller's guides are now available. Just email me for your copy.